CryptoCast. Hope everybody's doing well today. We got a lot going down in the market right now. We can take a look at, and I know a lot of people had a lot of questions about um, what's going on with the inflation report. I think a lot of people are caught up, obviously, in the misnomer that yesterday's move in Bitcoin and Ethereum had anything to do with Sam Bankman-Fried, otherwise known as SBF, and the FTX issue. It just didn't, because nobody cares. In reality, remember, mates, only 2% of U.S. investors were impacted by FTX's collapse. Okay? FTX has a lot of similarities to certain tokens, okay, that are held by 95% of the rest of the world and not held in the United States. XRP is a prime example of that. I'm going to do a video breaking down XRP and what realistically could happen if a settlement occurs in the next 30 to 60 days. Some people say it's going to happen on December 15th. No, it's not. I just don't see it happening. But, hey, anything could happen. I just don't see it happening. From what I'm hearing, realistically, living in the greater District of Columbia area and the number of people that work for the federal government and the number of people who talk and the number of people who are interested in crypto and the number of people who all this stuff, I just can't see that happening tomorrow. I really can't. But we could get shocked. Pay attention to the market, But what realistically will be that price appreciation for XRP? And what are the realistic tokenomics of it? And how fast will exchanges relist it if it happens that Ripple wins the lawsuit or settles? I would make the argument that settling is not exactly good for crypto. I'm just saying. I think a lot of people need Ripple to win the case. Just my opinion. But we are looking at trading today and what's going on in the market. I am on the exchange right now, and if you follow the channel in the last, blink. About the methods that we employ on the channel. About the methods that we mentor people about, okay, and just coach people about and coach people up. We don't do a lot of what else goes on in YouTube. We don't. Most of that, people got wrecked. Most of it's noise. Most of it's people clickbait. Most of it's people that understand that 90% of the people in the crypto space don't make their money off of trading, mates. They make their money off of monetization of YouTube channels and social media platforms. That's why they're influencers. They're not traders. So the millions of people that follow some of these crypto moguls, okay, aren't really being taught anything. It's like a news channel. And we all know what happens in legacy media. Okay? And so, so much of the oxygen has been taken out of the room by FTX Global and Sam Bankman-Fried and, all these petty arguments, Kevin O'Leary and all these petty arguments about, look, there's no difference between Kevin O'Leary and BitBoy Crypto. There's no difference between the two. They're both influencers. One on Shark Tank. One's a media mogul, okay, on Shark Tank. Okay, an entertainer on Shark Tank. He's on television. He's an entertainer. Okay, he's also an investor. Ben Armstrong, BitBoy Crypto, is on YouTube. He's on TikTok. He's a crypto entertainer. He's a crypto influencer. He's not a trader. He admitted it at the Central Miami that he is not a trader. That he only actually personally owned Ethereum and Cardano. He admitted it live to an audience. Now, did he expect that to go out into the ethers of the internet? Probably not, but he should have known that it was gonna. He should have known everybody was recording that interaction. So when he releases supplemental videos after November about his portfolio, people are going to go after him. Like, dude, you just said you only owed 2 coins. What is this portfolio you're talking about? Is it real? Is it a paper trade portfolio? Is it for entertainment? I mean, where's the disclosure in that? because you know people are going to, oh, well, BitBoy Crypto owns XYZ token. I saw it on his portfolio video. Right? Entertainers, mates. They're entertainers, they're not traders. So we talk as much as we can about trading and methods that will make you a better trader. Small, working class, blue collar folks, okay? You know, they have limited resources. They just want to learn and get slowly expose a certain percentage of their portfolio into crypto like everybody else. Some people buy it on Cash App. Some people buy it on PayPal. Some people buy it on Coinbase. Whatever it is, you know, that's where we want to get. I'm not a financial advisor. None of this is financial advice. It's education, right? It's like, this is how you can do things. But you've got to do it. There's you know, nothing, there's no get rich quick scheme. Those people all got wrecked, okay? Someone else fleeced them of all of that money, okay? I have said this before. You have bad actors in every single industry that you can think of. You now have multi-level marketing people moving into crypto because they know crypto, the people that are interested in crypto are the same people with the same mindset of multi-level marketing. I want to get rich quick. How can I get rich quick? And everybody has a Lamborghini or a Ferrari that's that influencer, right? They all made it. They all, now, my 5 altcoins went to $1 million, yet you're still on YouTube. I'm going to tell you what, mates. If I got to $1 million, right? I'm not going to be on YouTube no more. And neither would you. If you won the lottery tomorrow, you going to keep doing what you're doing every day? You're probably going to change your life up a little bit and enjoy it, right? So all these people that make all these outlandish claims about, I made $5 million in crypto during the bull market, right, and yet you're still on social media. Right? Same old grind. Clickbaiting away. Right? Doing all those things. Just don't buy into that stuff. Start out small. Learn the intricacies of crypto. Learn the exchange you're on. Trade the exchange. And drown out the noise. Follow a simple strategy. That's all you need to do. It's very, very easy strategies to employ to generate you a greater return than what you're going to get at a bank. That's what the banks don't want you to know. That's what the banks are scared of you knowing, is that you can do this. Now, you do not want to leave your money on these exchanges. Okay? You do not. That is not what we do. You want to put money on the exchange that you want to trade, that you are completely willing to lose. Okay? It's like when you place that bet in Vegas, or you place that bet on college football, or you place that bet on an NFL game, you are stating you're willing to lose that $100 if the game don't go your way. You explicitly know you're not getting that money back. That has to be your attitude with crypto. Okay? It's not putting something in a CD and knowing that it's there, gaining a little bit of interest. That's not crypto. Crypto is 100% speculative. Okay? And so you need to consider that. Okay? And understand that should not be 100% of your portfolio. I don't care if you're 18, 16, like 26. It should not be. Okay? It should be a part and parcel of your portfolio, especially when you're just starting out and learning and understanding the behavior. Because remember, mates, you do not trade crypto price. It's a big misnomer on YouTube. Okay? You trade behavior. What's the behavior going to be if X happens? What's the behavior going to be if Y happens? For example, let's talk about XRP. If XRP wins its lawsuit, that's Ripple. If Ripple wins its lawsuit with the SEC, X will happen. If Ripple loses, Y will happen. How do you plan a trade around those two scenarios, right? Every trade is like that. For example, on Tuesday, the inflation report was leaked that it was not going to be as bad as expected. You then look at futures trading. What is futures trading, Jay? Futures are what happens in the stock market after the market closes on Monday. News begins to leak out. It always does. It always leaks out, mates. Futures start going, you watch futures start getting higher and higher and higher and higher, which means the stock market's going to open higher at the open once the market absorbs the futures, right? That was your sign. That was your indication that Tuesday was not going to be like Monday or last Friday. That we were going to get the pump in Bitcoin and we were going to get the pump in Ethereum. It had nothing to do with Sam Bankman-Fried being arrested in the Bahamas. That had more to do with keeping him from having to come and testify. Because there are a lot of people who do not want him in front of Congress, okay? Because there are a lot of people that made a lot of money. And there are a lot of people who lost a lot of money, okay? It's not a lump sum game. FTX was open for a while. A lot of interest got billions of dollars donated to it from Sammy's charities, right? Where'd that money come from? It came from traders. It came from people putting money on the exchange. Other rich people. I don't know anybody, mate. I don't know a single person who traded on FTX. Go back and look how long my channel's been around, okay? The only people that were shilling FTX were people who were paid marketing dollars and sponsorship and promotion to promote FTX to begin with. And look at what Kevin O'Leary made, $15 million. He admitted it on an interview the other day. He got paid $15 million to be a promoter, okay? How much did the crypto influencers get paid to promote FTT, the token for FTX? Millions of dollars. That's where they're making their money from, mates. They're not making their money from trading like us, generating income, passive income through trading on the crypto exchanges. They're not. According to Ben Armstrong, he doesn't even trade. So where is he getting his money from? He's getting his money from promotions. Now, he says he's no longer promoting things like he used to. So he's not taking promotional money to talk about the coins and the projects that he's talking about anymore. So he claims. Well, then it begs the question, where's the revenue come from then? If you're not trading and you're not taking on promotional contracts where you get paid to talk about a project or a coin or a company or an exchange, where's the revenue come from? I mean, people need to start asking serious, smart questions. What kind of business do you actually have that you claim you have if you have no revenue or income coming in from, is it membership? Is now your revenue solely derived from paid members or paid subscribers for content? Okay, that's fine. I mean, well done you. I mean, that's a lot of hard work, trust me. But we are looking at today, right now, crypto trading, right? And after the entries, remember the entries, go back and look at the videos. 1265 Ethereum yesterday, okay? Bitcoin in the 17,000 channel, right? Lower 17,000 channel. Ethereum is trading right now at a lovely 1335, which is a 54.96% gain from the 1265 entry at 10x. So, again, people quickly grab your phone in the morning. Morning, Jay. What do you think is going to happen with Ethereum today? What should we do? What are you going to do? Again, I'm not your financial advisor, but what do you think is going to happen when you've got a rising RSI level? That's a relative strength index level on an asset that pumped for roughly 10 hours yesterday before leveling off. And where did it level off? If you look at your chart, mate, open up your chart right now for Ethereum, and you will see that Ethereum is trading just below its November 10th top of about 1340. Okay? So since November 10th, it has not been higher than 1340. Sorry, 1340, not 1240. And it hasn't been lower than 1222. Okay? It was 1221 on December 7th for a blip on a wick. Okay? Again, we're on the 4 hour. And then 1210 last month. Okay? But the nearest low is, again, for the channel, is about 1220 to 1225. So you've got a support line there, and then you've got a top line of 1340 going across the top of your graph. Okay? You chart that. That becomes your zone. Okay? And in that zone, that's where you're going to trade for Ethereum. And you do the same thing for Bitcoin. But here's the key, mates. 95% of the people in crypto right now sleep on this fact because they're not aware of it. That unlike the stock market, cryptocurrencies are highly correlated. The reason why they're highly correlated is because they don't really have sustainability on their own. And a lot of purists are going to hate on that fact that, reality is these are still speculative assets that nobody really has true confidence in acceptance and adoption. A lot of people now have moved away from that it's not even about that. And that's fine. But the reality of it is these are not companies. These are not Facebook, not Apple, not Amazon, where you have traditional structures, right? So the one thing that they all relate to are what? Bitcoin, the number one market cap in crypto, and Ethereum. And Ethereum more because of its DeFi exposure, okay? Right? So everything breaks itself against those two assets. So you have assets that are highly correlated to Bitcoin. And what I mean by highly correlated, I mean 0.98 or higher relationship to those assets. What does that mean, Jay? That means that, for me, easily translatable from a non-statistical, non-algorithmic, computer science-driven, quantitative analysis perspective, that tells me that 98% of the time, Litecoin is going to do what Bitcoin does, up or down. The percentages are not going to be the same because the underlying values are not the same. Litecoin is what? 70 some dollars a coin. Bitcoin is 17,000, 18,000 today actually. Okay? For a little bit. So the values difference the percentage of up or down, right? But 98% of the time, Litecoin and Bitcoin Cash do what Bitcoin does. Now, Bitcoin Cash, fork, obviously, with Bitcoin, right? Very similar, like relationship, siblings, if you will. Cousins, however you want to look at it. They're in the family. Let's just put it that way. They may not talk to each other. They may argue at Thanksgiving and Christmas, but they're in the family, okay? And then you've got Ethereum. Well, Ethereum has a bunch of forks as well, okay? Like, depending on whether one's a fork or one's not, or the Maximists want to argue this or that, Ethereum Classic, ETC, and then there's 3 or 4 other ones, okay? Bitcoin Silver, Bitcoin Gold, okay? People don't talk about those. They're still part of the family. They may be distant cousins, but they're still correlated, okay, to what Bitcoin does on the blockchain. And people forget about that. They do. And then they forget to trade them all together. So people would say, well, the use case of Litecoin is not blah, blah, blah. It's like, I don't care. Why as a trader should you care what the adoptability of the use case is when you're trading it in 4 hours? You only care about what the behavior is going to be within the 4-hour candlestick. We are on the 4-hour chart right now. We can see that Ethereum right now is at 1333 and just now starting to go red. Wow. That's why if you were following on TikTok, CryptoCast Leverage, you will see we entered in and called for a short at 1340. Why'd you do that, Jay? Because the chart told me that the probability of it moving higher than 1340 was lower than what was expected in the market. People calling the behavioral pump, we're going to keep pumping. Ethereum's going to keep pumping. But if you look at your chart and you have your Heikin-Ashi candles open, you can see what's called a wick. The wicks at the top tell you, mates, that there's not buyers at that level. And every time we touch that level at 1240, we got a wick. It means people were selling. Why? The last top was November 10th. It becomes resistance. So it's doing this. It's trying to get up above that, right? Now, Did we exit our Ethereum entry at 1265 at 10x, which is up 54.56% at 1334? No. Okay. So wait, Jay, wait, wait, I'm confused, Jay. You've got a long trade open in Ethereum and you've got a short trade sell down. Why? Because one becomes an insurance policy. Okay? And I want you guys to understand that. All right? You buy insurance on your automobile. Why? In case you get in a wreck. Right? When you enter in a trade, you want to buy an insurance hedge bet in case you get in a wreck. Okay? So in case the market decides to wreck you, meaning all of a sudden you were pumping, and now it's dumping, right? It's an insurance. Okay, can you exit that trade? Your open trade long right now at 54% gain? Absolutely. Get exited at 10%. This is a bear market, mates. You determine your own value of your portfolio and of your trade through your expectation of behavior. 20%? You're going to tell me that there's anybody in your universe that's going to not take a 20% gain on their dollar right now in this economy? Right? You say that in the break room. I'll guarantee you 20% rate of return on $100 if you give it to me right now. Who's not going to take advantage of that? 20%, right? It's at 54%. But you wait. You wait for that 1 hour candlestick to be red. Remember, we trade on the 4 hour. You trade on the 4 hour. And I know people are always like, Jay, why do you trade? You're like the only guy who trades on that. Oh my God. Exactly. I'm the only guy who trades on the 4 hour on YouTube. I get that a lot. Because the other people that are trading on that are sitting at a desk in New York City or Chicago or London or Hong Kong, sitting their butt in the desk all day long, trading all day long off the 4 hour. Okay? So I'm not surprised. Everyone wants to trade on the 1 minute chart because it's sexy. Yeah, it's also wrecks people. It wrecks people. Okay? Exchanges love those folks. Absolutely love them. Okay? Because you've got a 90% chance of getting wrecked. And if you're part of the 10%, God bless you. God bless you. You got it dialed in, God bless you. But the reality of it is 4 hours gives you a time for the market to really indicate and tell you what it's doing. Okay? What it's really doing and what it's really trying to say and communicate to you. The 1 minute does not. It does not. Okay? 5 minute, What's the attention span of a teenager? You're going to trade within the same value period less than the attention span of a teenager. Good luck. And they lose. On the 4 hour, it's a much conservative rate, time frame, that allows you to sit back and digest everything that's happened. And I challenge you to use the 4 hour if you don't and see what happens. See how you become more successful. Because you're not nearly as impatient about your trade or worried about your trade, right? And so right now on the 4 hour, we're just about to go red, okay? And so we're sitting and waiting for that. And then we can decide, okay, how deep is this candle going to go red? Can Ethereum hold 1338, okay? Because its 5-day and its 7-day daily moving averages are just below it, okay? They're just below that level. The 5-day is a little bit further down at 1328, okay? If it falls back down to 1328 and breaks through the 5-day going down, the next level is 1315, mates, okay? That's why you take the hedge sell down on your open trade. Now, what else can you do? Mates, you can use your limit feature for your entries and exits, okay? So if Ethereum was trading right now right at 1340, okay, like it was when we entered the sell down, you could have entered a sell down at 1335 or 1328, which would be its 5-day moving average. In the event that it fell to that level, it would break through that level and keep going down, or just above that level. In the event that it fell to that level and it tested that level and bounced back, right? Use your limit orders. Good till canceled. Limit orders. Okay? Now, you're getting your lunch. Okay? It's 1 o'clock on the East Coast. Okay? Maybe you're at lunch and you got to go back to work and you're sitting in this trade in Ethereum. It's at 54%, and you're like, I got meetings this afternoon. I'm not going to be able to look and check to see what the market's doing. Set a sell order for your open entry at 10x that you entered in at 1265 for whatever number. Say you want, okay, if it goes down to 1334, it's going to fall to 1328. So I'm going to set my limit sell order for my buy up, which is a long trade. I'm going to set that at 1334. And so if it goes down to 1320, by the time you get back to your desk, you got out of 1334 while you were doing all your meetings and take care of all the stuff you got to take care of. That's the value of the limit orders on your exchanges. And too many people leave these trades open, okay, and are away from their trades for too long a period of time. That's why I also why I like trading at the 4 hour. Okay, I can leave it for a long period of time because I'm using the 4 hour. I understand that it's going to come within these candle ranges set, with the pattern to know these ranges. These ranges for the last 12 hours are 13, 15 to 1338. So it's not that big of a range, right? Okay, so, and I got in at 1265. So I don't have to worry about it falling all the way back down to 1265, right? Like, it's going to stay in that range unless something happens, right? And so that's the value of using your good till canceled orders. The value of trading Ethereum Classic at the moment, let me pull Ethereum Classic up. Okay, so right now, think about this. Ethereum is trading at 1338. We'll pull off ETC, which is the symbol for Ethereum Classic. Ethereum Classic is trading at 1919. Okay? 1919. And we have a sell down at 10x at 1956. Okay? Now, our buy up yesterday on Tuesday, if you were following, with Ethereum, was 1265. At the same time, the buy up for Ethereum Classic was $18. The $18 trade yesterday went all the way as high as 1975. Okay? If you count the wick. I usually don't like to count the wick because that's, what is the wick again? What's the wick tell you? The wick tells you that there were more sellers than buyers at that level. So it couldn't get back above its December 5th high of $20. So it failed to test $20 resistance, okay? And if you wipe the wick out, it's 1940, okay? Above that, at 1956, that's where we entered in a sell-down trade in Ethereum Classic, okay? But that $18 entry to 1975, okay, versus the 1265 entry to 1340, okay, which of those trades was a greater return on your P&L for a 10x leverage trade, or a 5x leverage trade, or a 3x leverage trade? Ethereum Classic, mates, 78%. Okay? Why did Ethereum Classic perform better than Ethereum when everybody talks more about Ethereum being, the legit coin for DeFi? Valuations, mates. You got the same price movement from Ethereum Classic that was demonstrated in the Ethereum chart. But Ethereum Classic was $18. Ethereum was $1,265. It's math, mates. And I know a lot of us hate doing math, but this is the kind of math that's going to make you money trading over and over again. It's understanding correlation. Okay? Understanding how that actually works and how you can apply it on your trading plan. Now that's Ethereum Classic, and that is Ethereum. So let's look at Bitcoin right now. Take a look at the Bitcoin chart on the 4-hour, and then I know what it's going to tell me about Bitcoin Cash. But just to show this, we'll talk about Litecoin, okay? Because they both have a high level of correlation to Bitcoin. So Bitcoin right now is trading at 18,192. Do y'all remember the entry call for Bitcoin? Go look on TikTok. CryptoCast leverage. Just above 17,000. Okay? DMA cross, the 12th of December. Okay? The first one was at 1703. The second one was at 17,150. It was actually 140, but 150. And what happened after that? It went from 17,140 to 17,925. Okay? Then it leveled, and then you've got what's happening with her right now from 17 this morning, from 17,800 to 18,203. Okay? Now, this is what we're going to look at with Bitcoin, because this is going to help you understand what's going to happen in the next 24 to 48 hours. Today's Wednesday, okay? You're going to go on your index, okay? We're going to click the little icon. If you're on the exchanges that we trade on, you know basically what I'm talking about. Click on that icon. Just click on RSI, Relative Strength Index. If you're on TradingView, I'm on TradingView on the exchange. But if you're just on TradingView.com, if you're brand new, you can use TradingView. It's free. Just use TradingView.com, and you can look on that. And you can have your Coinbase open. If you're brand new to crypto, you probably bought used Coinbase. Okay? Regulated in the United States. Let me stress this fact. Regardless of what all these knuckleheads on YouTube tell you, at least Coinbase is regulated. It is a publicly traded company in the United States. It is regulated with oversight. And it has proof of reserves. 1-to-1. So if you own a Bitcoin on Coinbase, they also own a Bitcoin. Okay? 1-to-1. All right? Remember that. Because a lot of people get that confused. Okay? And when they talk about Coinbase and they talk about, okay, they don't like it because it's centralized. Well, that's what all these jokers now are asking for at post-FTX. If you're asking for the government to regulate crypto, that's what you're going to get. Okay? So, welcome to the revolution that you guys have undermined by bringing in governments into cryptocurrency. Well done, you. We are at an 85 on the RSI for Bitcoin right now on the 4-hour chart. That is an elevated RSI. That relative strength index above 70, mates, will communicate to you that Bitcoin is trading at an overbought position. That is all you need to know. And then now you're going to look for your exit. Well, where's my exit going to be, Jay? Well, go back. Bitcoin is at 18,000. Bitcoin is at 18,244. The last time it was that high was roughly the 8th of November. See how that correlates with Ethereum? So now it's challenging its early November high. Now, that's the 8th. Now, the highest high of November was, of course, 21,300. So that's your long frame tops, okay? So right now, Bitcoin is trading at its highest level since November 8th. And then its next level from here is about 21,000, a little bit less. Okay, so that's a big gap. Remember, because that's when we saw Bitcoin go from 20,800 all the way down to 15,755 on November 9th. Okay, that's when it happened. That's when, okay, that's when the dump happened, right? So the top of that before the dump was 21,300. And now we are today. So we're above almost 30 days of trading levels right now in Bitcoin. Okay? Why? Because of the inflation, the cooling off of the inflation numbers. That ain't going to last, mates. That number influenced the behavior of Bitcoin for yesterday and into today. But the chart is telling you that too many people have bought Bitcoin right now. They're buying into this move. Institutions maybe, but the reality of it is profit taking always comes above 85 RSI. That is why you would enter in right now. Again, you bought up at 17,140. Okay? And you're now at 18,239. Okay? Now remember, this is an $18,000 asset now. So that return is only about 30-some percent, 33%. Okay? Which is still a great return. But Bitcoin's way more expensive, right? Sorry, not even 33. Way more expensive than Ethereum. Way more expensive than Litecoin, Ethereum Classic. Correlated assets, right, are much cheaper. So that's why you want to trade with those. And it's very, very interesting to see how that works. Okay? Because Bitcoin now is telling you that I'm getting a little tired on the 4 hour. Okay? So where is she on the 1 hour, Jay? If she's 85 on the 4 hour, what's she on the 1 hour? This ain't 85 at the highest level since December 13th. She got to 85, and she hasn't been that high since the 8th of December in the RSI. And after each time she got to that high, she dropped to 42, 56, 67. So in order to do that, the price had to drop. So that's why you enter in your sell down now, okay, at 18,255. 250, 255, 260. Okay? Small little entry hedge to protect your open long trade that you entered into at 17,140. Same thing we talked about with Ethereum. That's how you do it. Or you could just sell out and take your profit now. And then take that money and buy a short. Again, that's another strategy we talk about. Let the exchange fund your trading. Sell right now. Take 30% in Bitcoin. 26% profit. Okay? Take that money. Right? And put it into a sell down trade. Or, better yet, say you put $500 into this trade. And now you've generated your profit. You take your profit off the exchange. You leave the $500 that you originally put in your Bitcoin trade on the exchange. And then you take that $500 and maybe take half of it and you put that into your sell down trade. Okay? There's a whole bunch of things we talk about that you could do, whole techniques and strategies that you can do to where you're using the exchange money to trade, not your income, not your check, your paycheck, your personal stuff that you've generated through your work. Okay? Certainly not your rent payment, your car payment, your mortgage payment, your student loan payment, any of that stuff, right? That's not what you want to do. Okay? Keep your family secure, safe in this recession. Okay? So let the exchange money that you generated from previous trades generate you more money. That is the simplest and easiest way for you to avoid capital loss exposure to your actual finances. Is never using those finances except your initial startup capital that you'd allocated in your portfolio to trade on crypto. $100, $50. I have a mate that takes 10% of his paycheck, 10% of everything. He tides 10% to crypto. Out of every paycheck that he makes, he takes 10% of his paycheck and he puts it on Coinbase and he moves it to his exchanges to trade. That's what he does. This doesn't matter to me. Like, it doesn't matter to me whether you pick up the phone and you call me. Guy doing freaking $50,000 trades last month. Shorting the market last month with $50,000 entries per trade I'm talking to on a call while he's trading. And I'm just talking to him while he's trading. Right? Like, okay? Other guys, $50. Nobody cares. The exchange doesn't care. Because whether you put $50,000 into it or you put $50 into it, the behavior of the asset's not changing. It's going to do what it's going to do. Okay? So, did the guy who made $50,000 make more money on a percentage? No, he didn't. He made the same percent return that was reflected in the behavioral move of the asset that you made at $50. Okay? There's your level playing field, mates. Yeah, he generated more income from the trade because he put more money into it, because he was using more of the tokens, and therefore 10 times the leverage because he was trading at 10x. Okay? So think about that. $50,000 at 10x. Okay? He's willing to lose $50,000 because that's what he put into the trade, and then he 10x'd it. Okay? But at the end of the day, the move that was generated in those trades is reflective of the price of Bitcoin. Okay? So maybe you got the same 10% move, 20% move. Okay? And then rinse and repeat and replicate it. That's what that mate did in 2 days. November 7th, 8th, and 9th. For actually 3 days. 7th, on the evening of November 7th, the 8th and the 9th, he was trading, rinsing and repeating. Okay? And that's how you do it. It doesn't matter whether you're trading with $50 or $50,000 or $5,000. It doesn't. The methods are the same. Reading the charts is the same. The relative strength is the same. Okay? No matter what indicator that you use, no matter how you want to trade, it's all the same. It does not matter whether or not you are putting in $50,000 or $50 on the exchange in terms of learning the method, learning to read the chart, and profiting from the move. Just like everybody did yesterday and everybody is doing today. So the next move is where everyone's now you're looking at. You've already locked in 54% in Ethereum right now at a little after 1 o'clock Eastern Standard Time on Wednesday. You've already locked in 36%, 33% in Bitcoin. You've already locked in 76% in Ethereum Classic. Okay? Using the same framework of Ethereum and Bitcoin correlation. You just rinse and repeat it again. So what now is going to happen? Well, Bitcoin's trading at an 85 RSI, Jay, at 18,262. Let's have a look at Litecoin. Because Bitcoin Cash is too easy. I already know Bitcoin Cash is going to be identical to Bitcoin. But Litecoin is the silver coin, it's a separate thing. What, in the hour, Litecoin is already starting to go down. Okay? But let's go to the 4 hour, to be fair. Okay? And we will pop back on the RSI. And we'll see what RSI level did Litecoin reach before it turned. Just below the same level. Actually 60. So it's 60. Okay? So you're not getting as much correlation in Litecoin today like you did yesterday. And like you did on the pump. Okay? The last two pumps. Alright? Than Bitcoin Cash. So Bitcoin Cash is actually highly correlated today with Bitcoin than Litecoin is. Doesn't mean you're not making a nice rate of return with Litecoin at all. Litecoin now would be a short at 77. Why? Because it just crossed its 5-day moving average down. And now it's going to challenge its 10-day moving average at 77 and its 30-day moving average at 76. If it breaks through those three, it is going to hit 73 to 74. So that would be a move to the down, capturing about 9 to 12%. It's the same method, right? Okay? So let's look at Bitcoin Cash. Bitcoin Cash is exactly, the chart basically looks identical to Bitcoin. Okay? It's trading now at about $111, but it's trading at an RSI of about 64. Okay? So a much lower RSI level in Bitcoin Cash than Bitcoin. Okay? By about 20 basis points. But the chart formation, in terms of the candles, is basically the same. Okay? It's trading now at 111. Its last short-term top resistance is at 112. And then on December 4th, it got as high as 116. Okay? So where are we at today with its 5-day moving average is at 110. It just crossed its 5-day. Its 10-day moving average is 109.25. Its 30-day moving average is 108.34. That's why Bitcoin Cash hasn't gone red yet. It's crossing its technicals are breaking from its DMAs. Okay? And its RSI is not elevated. Okay? It's at its average RSI for the month. The last time it was above that level was December 4th and November 22nd. So it's not elevated at all. There's no reason to sell Bitcoin Cash unless, what? People start dumping Bitcoin, okay, on the 4-hour chart or on the 1-hour chart, right? When you look at the chart, you say, oh, Bitcoin's red. Well, if Bitcoin is red, okay, on the 1-hour or 2-hour chart, it's going to then correlate over to Bitcoin Cash within an hour or another 2-hour, a 4-hour stick, because there's 4 1-hour sticks or 2 2-hour sticks in a 4-hour candle, right? It's very simple. So that's how that works. But you want to make sure that you correlate that way. Okay, mates? Understand, it should never just be one trade. Once you get the methods dialed in. Start with one asset. Now, one of the other ones I get, mate, Scott here. Steve, I got you. Hold on one second, mate. I got you. Steve, Jake, Chris. I know, XRP coming up. I got you. XRP chart loading right now. Where are we with XRP? Let's look at XRP. We'll look at its RSI level. XRP's RSI level is the same as Bitcoin Cash, identical to Bitcoin Cash. Only on the 4-hour chart, we've got a 5-day moving average of 39 cents, a 10-day moving average of 39 cents, and a 30-day moving average of 39 cents. What's that tell you, mates? It means XRP has to break 39 cents. Okay? Last time it traded at 39 cents, December 8th. Before that, it traded at 39 cents the 3rd through the 4th of December. The last time it was higher than 39 cents, November 30th. That's your short top, 40 cents. Your bottom in XRP, 37 cents. It's a 3-cent zone, okay? But it's breaking above just barely. Looks like that candle might go red. So there's no trade for me here. Like, unless I see something break out above 39, I want the 4-hour to show me something a little bit more than what it's showing me right now. It's basically in a 1 cent area. Can you trade that? Absolutely, you could trade that. Because remember, you're talking about a 39-cent asset now. So a 2, 3, 4 cent move is major, okay, on leverage. All right. So don't let that dismiss you like, when you look at that. Remember, the lower the value of the asset, the greater the percentage of return can be on a move either direction of that asset because it's a percentage of that value in which it's moving. Okay? So don't sleep on that fact. So that's XRP, mates. Yeah, I would hold off for me personally. Again, I'm not your financial advisor, but I'm not liking just, it's not a not like on XRP. It's hovering in that now for 16 hours. So it's not, people are waiting for the, people I think on this are holding off until whether or not they find out whether or not there's actually a settlement tomorrow or not. And if we wake up tomorrow morning and there's no settlement and it was all BS and it was all just more YouTube influencers shilling clickbait, you're looking at potentially challenging below 39 cents and then falling back to 37. And if that happens, if we don't get a settlement announcement, I'll short it. Okay? Because if you look at when that story broke that there would be a potential settlement on December 15th, it was the 11th of December. And we have gone from 37 cents to almost 40 cents since then. It's still in the 39 cent range. It's all predicated on that. So if you take that away, it's liable to come back down. Look, Cardano hasn't moved at all. Cardano's been at 31, 32 cents. It ain't moving at all. Okay? There's no trade in Cardano right on leverage right now. There hasn't been. It's not participated in the last 2 days, any of this. So you want to remember that, okay? They're not all going to act in concert in a bear market. You're going to be seeing winners on one day and losers on another. Yeah, AJ, I got you. Hold on one second. Let me pull it up. AJ wants me to look at Solana. Man, Solana's taking a beating in the bear market. She's up today. She is up today. AJ, she is at 1474, above her 1421 DMA. She has busted through. Hold on one second. Let me pull that up. Let me just double check one thing real quick. If you were long in that trade, AJ, at that breakout, that is a awesome call on your part. But I would tell you, yeah, it's at about a 74 RSI right now, so keep an eye on that. That is going to keep me from entering. There are people who are riskier that are just go in because, I would have wanted to be right on that 1420 channel with my entry in anticipation of it breaking that because it would now be at 1472. Nice little pop there on the candle, 4 hour out of the trade. Take about 8 to 12% return. Easy peasy. But now, if you enter a trade now at 1475, that's as high as it's been since, November 11th. Again, a lot of these charts are looking the same. Bitcoin, Ethereum, Solana, Litecoin, Bitcoin Cash, XRP. They're looking a lot like where they were on the 8th, 9th, 10th, 11th, right? The altcoins, maybe not as much Bitcoin, but getting back to where it was. So yeah, that's a great call. That's a great trade there. That's a good. What was that? Hold on one second. What did 1388? So AJ got in at 1388. Okay, which was the 10-day, right when it crossed the 10-day. It crossed the 30-day, then it crossed the 10-day DMA, was below the 1421 5-day. Okay, so he got in at 1388. And it's now 1476. So, I'll pull this up right here. I can show you all this too. I show this stuff in a leverage course. 1388. And when we say it was 14, what do we say it was? 1476. AJ, I'm assuming you were a 10x, mate? 10x? Yeah. 59.62%. So AJ trades at 59.62% right now in Solana. From a 1388 entry on the 10-day as it crossed the 10-day to now 1477. That's it, mates. Use the DMA method. Doesn't matter whether you're 1x, 3x, 10x, 20. Doesn't matter. I would not go over 10x. Again, not your financial advisor. You need to make your own decisions. Break it down. Look at your that. But that's a great, great, great call. All right, mates. I'll do. We've been on for about an hour, so I will do one more. Give me one. Anyone. All right, Steve. Matic was pumping, okay, the other day. And I missed that trade. I missed the trade from 88 cents to 93 cents. That would have been a great rate of return. You pull it up, Ed. You pull it up there, bud. Hold on. Boom, boom. We're going to pull this out. Let me relay this chart over. I'm going to go back to the 4 hour. Close out Solana. Let's take a look at that. All right, mate. What was your entry level? $91.1. All right, his entry level is 91,913. Okay? And that was right on the, again, the 30-day. Okay? And then it crossed the 10-day and the 5-day. It's sitting right above the 5-day now. So that's a great, again, DMAs. You pick the 30-day break to enter in the trade. A lot of people will wait on the second break of a second DMA. Okay? When you break the third DMA, that is called a trifecta DMA cross. That is what it is called. Okay? And that's what you have now with Matic. Now, Matic's top end right now, short-term top, is 93.8. 0.938. And then after that, the next leg up is 95 cents. So, and we are sitting right now at 93.5. Okay? Pretty good volume. But we are above its 3 days on the 4 hour. But let me just check really quick. The 1 hour and just kind of see what the volume. Man, the 1 hour is a pump candle. Okay? You've got a little bit of wick at the top. That wick starts at about 93.4 to 93.7. So keep that in mind, all right? When you're trading Matic in terms of your exit level. They're going to have to fill that wick on this candle, on that 1 hour candle. And let me see here. Let's just see what that yeah, man, that's going to be good. I think it's going to be a great trade for you. That 1 hour, the wick touched the top from 13 December. Okay, so it's got to break through that 93.565 level. Okay, and then you're gonna. That's a move, and that's just the 1 hour. Okay, but yeah, that's a solid trade, mate. Love that. Yeah, I just missed the Matic trade. Now, when I was doing other trades, it happens. You got to keep that watch list. But I just was not following Polygon in my mindset because it's not one of my highly correlated assets. It's an altcoin that I follow, but it's not a highly correlated asset to Bitcoin or Ethereum for the bear market. So I kind of lose track of it sometimes. You'll find that. And then you come back to a chart like that. But it's awesome you're dialed in, that you got it. Again, under $1. If you can find those altcoins that are trading under $1 right now. These moves, these 3, 4, 5 cent moves, when you're using 3x to 10x leverage, they're going to provide you with an awesome rate of return. All right, mates, I appreciate you taking an hour of your day. I just wanted to do this. I'll get back into doing the lives so you can see the screen once I get the new setup. So you just hear my ugly, instead of seeing my ugly mug, you'll hear my voice, but you'll see the screen, what I'm doing on the screen, and I'll walk you through these trades, walk you through the charts, walk you through the zones, walk you through the methods on hedging, all of these things, so you can get ready. And we're like, what are we getting ready for? You got to get ready. The bear market is when you get ready for the next bull market, mates. That's what you need to take this valuable time. A lot of people have walked away from crypto. They have walked away because of everything that's happened. throw their hands out. I lost some money. I'm done with crypto, blah. This is the time in a bear market where you educate yourself slowly with a little bit of exposure. You work around the charts. You find the exchange you want to work on. Legitimate. You've done withdrawals, so you know it's legit. You've done everything. And then you start to trade and apply these methods in the bear market. Because once you get these methods dialed in this bear market, what's going to happen in 2 years when Bitcoin halves again? You are going to be light years ahead of everybody else. That is the way of crypto. Okay? Because when that halving happens, and it's going to happen in 2024, going into that, quarter 4 of 2023, and then in the spring, Q1 of 2024, watch what you see. You're going to be, in about 3 months from now, what's going to start to happen, maybe by Easter, but somewhere in that time frame before summer, you're going to see a legitimate slow accumulation phase of the bear market. It's not going to be massive. It's just going to be slow accumulation of supply. Okay? And so we'll do a little bit more videos on that. I will release that XRP breakdown. I mean, this is a pretty in-depth XRP video, mates, on the tokenomics of XRP, the actual reality of what could happen if the settlement comes or doesn't come in March or before March, or what's going to... all these people talking about XRP going above $10, I'm going to debunk all of that, okay? They're not going to like it. The XRP's army is not going to like it, but we need to keep things real. We need to keep things legitimate, and the only way you do that is applying tokenomics, okay? Supply and market cap, okay? Conditions and data analysis. That's how you do it. It's not just throw a dart at the board and pick a number, okay? You guys realize these calls for XRP to be $40 to $60 a token would make XRP valued more than Bitcoin, market cap wise. Just saying, you start throwing numbers like that out, then XRP becomes the #1 market cap crypto token that's really not utilized. It's really not. If you look at what the bank's usage is, I'll get into that. The real facts of how many banking institutions are actually using XRP. And how many are doing these transactions actually without using the XRP token? We got the lowdown on that, mate. So hopefully you turn in and check that out. Appreciate it if you like and subscribe to the channel. Always shoot anything in the comments. You can find me, mycryptoballers@gmail.com, if you have any questions or you want to get on a call and I'll walk you through the chart, walk you through all that stuff. Or you can follow on TikTok, CryptoCast Leverage. All right, mates.